Hello, thank you for joining me today. My name is Jenna Heatherly, and this is going to be your FEGLI overview video. Okay, what does your life insurance look like that's provided by your employer, the federal government? So I work for CSC Capital Management, Civil Service Employee Capital Management. We're federal retirement consultants. We help with the whole planning process, the transition process from workforce to retirement, and so forth. We're a family-owned business, so my dad is actually the president of the company. He's been doing this for over 25 plus years, and I've been doing it for about 3.5, but life insurance is my main focus here at our company. And so I just thought it'd be beneficial to just do a really quick breakdown of what your life insurance looks like while you're working, what that's going to look like in retirement, and so forth. If you have any questions, my email and phone number is going to be at the last slide at the end. Feel free to reach out for any clarification if you need a review of your current situation, things like that. I'm a visual learner myself, so I just thought that this might be beneficial for some folks to be able to see it, pause at their own time, take some notes, write down some questions to ask me later. I hope you find this informative and beneficial. With that being said, let's get started. All right, so your FEGLI, Federal Employee Group Life Insurance. Again, this is your employer-provided life insurance. As you can see here, you've got basic option A, B, and C. These are all the different options you're able to have while working for the federal government. Okay, what we're going to do is we're going to talk about each individual option itself, what the coverage looks like for you while you're working, how do they work during your workforce career, and really what do these options look like in retirement. Okay, it's important to note employer-provided life insurance is great. Okay, it's relatively inexpensive. You don't usually have to take a medical exam in order to get insured by your employer. But it is important to remember that if you leave the job, you cannot take your FEGLI with you. Okay, if you go leave the job, work somewhere else, even if you intend on coming back to the VA, your FEGLI doesn't follow you. It only covers you as an employee. And with that said, in retirement, you're no longer working, so these options do look different. Okay, so like I said, take some notes while you're going through each individual slide. If you have some questions, give me a call, talk my ear off, and let me answer all of them for you. If you want to pull out your leave and earnings statement and look at your deductions page while we're going through this to see what you have, what applies to you, or what you want to get, it's good to have that. See what you already have. See how that's really affecting you. Okay, so now let's move on to basic. Okay, so first off, we're going to talk about basic. Basic, everyone is automatically enrolled into this unless you went out of your way to opt out. Okay, can't tell you how many folks I'm talking to and I'm like, you have FEGLI? No, I don't have it. Checks their deductions page. You'll see that acronym FEGLI. It'll have a code next to it and it'll give you a dollar amount of how much you're paying bi-weekly for it. So again, you're automatically enrolled unless you went out of your way to opt out, okay? Don't believe me? Go check your LES statement. Okay, so what basic is that's going to be 1 times your annual base salary, round into the nearest thousandth, plus $2,000 extra, okay? The federal government throws in about $2,000 extra in there. For example, you have a salary of $100,000, you have $100,000 of life insurance, plus $2,000 more. Okay. The employee pays 2/3 the cost. Basic is extremely cheap. You can see on there 16 cents per $1,000. Okay. Postal employees, this is free. There's no deduction coming out of your paycheck for this. Okay. So again, this is basic. Everybody's got it unless you filled out paperwork to say no, thank you. All right. Now, option A is our first option here. You can see my first bullet point there says must have basic. Okay, in order to have any of these options, A, B, or C, you have to have basic. Okay, you can think of it as the base life insurance, all right? So what option A is just a flat $10,000. Just it, okay? Employee pays full cost, about 2 cents to 60 cents per $1,000 bi-weekly. Again, just that flat $10,000 of insurance. If when you started with the federal government, you did not enroll into any of these options, if you now want to get option A, you have to wait for open enrollment in order to be enrolled into option A, okay? There are circumstances where you can submit medical paperwork saying, I need option A, whether that's you were denied life insurance outside, things of that sort. Talk to your HR and see what those qualifications are, okay? Now moving on. All right, now we've got option B, okay? Again, must have basic. Option B is up to 5 times your base salary, okay? So what that means is you can elect a multiple from 1, 2, 3, all the way to 5 times your annual salary, okay? Employee pays full cost, 2 cents to $2.88 per $1,000. Okay. Now you see on here Killer B. Okay, why did she put Killer B? That's kind of the reason for that is right underneath it, age range increases. Okay, a lot of folks aren't aware of this. Okay, at age 50, your biweekly premium for option B is going to double. Okay, bi-weekly. Remember, you're paying for this life insurance out of every paycheck you get. Get paid twice a month. You are paying for it twice. So when you look at one LES statement, you need to double that amount that's on there to know exactly what you're paying. So the reason, again, Killer B, age 50, your premium doubles. Every 5 years following that, it's going to double again. So at age 50, then age 55, then age 60, it's going to continue to double for that same set price of insurance, whatever multiple you chose. Okay, the insurance amount doesn't change, but your premiums increase. Now you may think that's ridiculous. That's insane that they're going to multiply it or double it like that. And it is, it is crazy. But the reason for that is option B, you're in a group plan. You're grouped together with folks that can't be insured outside in the private sector. Okay, if you have cancer, if you have diabetes, if you have heart problems, and you can't be insured outside, option B is going to be your only option to get the most amount of insurance, right? Okay, with that said, if you are young and healthy, you're not going to be paying that much for B right now, but when you reach age 50, your premiums will double. Okay, and you're going to see on my slide when we talk about how this plays out into retirement. It might be beneficial for you to look outside for life insurance rather than choosing a large multiple of option B. And the reason for that is you can get a life insurance policy outside that's going to cover you with a set premium amount to never change with a larger insurance amount than you could get with option B. Okay. And what qualifies you with that is your age and your health. So the younger you are and the healthier you are, the cheaper your insurance is going to be. Okay. So if you have option B and you're young and healthy and you don't have outside life insurance, wait till the end, see my email on there, and you're going to want to send me one, okay? All right, and our last option here is option C. Again, must have basic, but what option C is not life insurance on you, but you're paying for life insurance on your spouse or children up to the age of 22, okay? For your spouse, $5,000 per multiple, just like option B. You can go up to a multiple of 5. Same with the children, up to a multiple of 5, only $2,500 of insurance, okay? This is only up until age 22 for dependent children. If you have questions about children with disabilities, send me an email. I can go into more depth with you on that, okay? So now that we've gone over all of our options, what those look like during your workforce career, what the coverage is while you're working, now let's go look at what it looks like in retirement. Now, in order to keep FEGLI into retirement, there are 2 eligibility requirements that you have to meet, and that is 1, that you retire on an immediate annuity, okay? No deferred retirement, no retiring early and getting hit on your pension and gotta wait, anything like that. No, you gotta retire on an immediate annuity if you want to keep the life insurance. The second one, you have to have been insured by FEGLI for at least 5 years preceding retirement, for at least 5 years coming into retirement, okay? Those are the only 2 requirements you have to meet. Pretty easy. Now let's look at the coverage in retirement. All right, so looking at basic into retirement, you've got a couple different options when it comes to what you want to do with your basic when you are leaving your workforce career. Okay, the first option is you can waive your coverage. No longer working, I don't need to be covered by my employer provided life insurance, okay? Second option you have here is a 75% reduction. I'll tell you, this is what most of my clients do. Take the 75% reduction due to the fact at age 65, it's free because it will start to reduce 2% every month until only 25% of your insurance remains, okay? For example, you have $100,000 of life insurance with basic. It's going to reduce to being $25,000. Even while it's reducing those 2% every month, at age 65, it's free. From that point out, it's free, okay? The next option you have is that 50% reduction. This is going to reduce 1% every month after the age of 65 to being 50% of what you once had. This is not free into retirement if you chose the 50% reduction. You can go back to our first slide where I talked about the price of per $1,000 to kind of get an idea of what you're going to be looking at. If you need some help, send me an email. We'll look at your numbers. Your last option here is a no reduction. Okay, at age 65, your cost of insurance is going to be $2.25 per $1,000. Okay. Do the math, see if that's cost effective for you. Okay. Is this the only insurance you have? Is this what you're banking on? If you need help with clarification or really making that decision, send me an email. I'm more than happy to help. Okay. So moving on to option A. Okay, now looking at option A in retirement, you've only got two options here. Remember, your option A is a flat $10,000. Okay, your first option is just to waive the coverage. Okay, the second option you have is it's a 75% automatic reduction. Okay, so at age 65, just like basic, it's going to reduce 2% every month till $2,500 remains. At age 65, when it starts that reduction, it's free, okay, from that point on out. So that's your A, okay? That $10,000 of insurance gets down to $2,500. All right. Now, option B in retirement. Remember, option B is the one that you can elect up to 5 times your annual base salary. Okay, it's the killer B here. All right, so your options in retirement are you can waive the coverage. Like every other one, you have that option to just say, no, thank you, I'm done. Not working, no longer need it. Second option is a no reduction. What does this look like? That means your premiums will continue to increase every 5 years. Remember, they've been increased at age 50. They've doubled at 55. They've doubled at 60. Okay. So we need to be aware of what you're paying by age 65. Okay. If option B is your only option to get life insurance, if you cannot be covered outside and you're worried about these increasing premiums, send me an email. Let's take a look at your situation and see what we can do to create the most cost-effective way for you to keep option B. Okay. With that said, if you are young and healthy, if you are 50, if you're 55 and your premiums are starting to double and you're worried about that cost, if you are younger than 50 and you have option B and you're now learning that your premiums are going to increase for life insurance that you may not be able to keep into retirement because of the cost, send me an email. Let's look outside to get you something where the premium's not going to change. Okay. So like I said, a couple different options here. You can kind of get an idea why I call it the killer B, right? I can't tell you how many folks I've talked to that had option B and thought they had $300,000 of life insurance forever just to learn that they're only going to have it for 3 more years because they're going to be 65. See what I'm saying? One of my clients a couple months ago realized she'd been paying $500 for her FEGLI a month for the set amount of insurance. She was about to turn 65. It was going to be gone. She's paid that much into it already. Okay. So what we did, we got her something outside with a premium that's never going to change, and she'll have it for 20 more years into retirement. Okay. So like I said, if you have questions about what to do with option B, send me an email. Okay. As I was reviewing the video that I made, I realized that I did not talk about the full reduction for option B into retirement. And this is very important. I don't want you to just have to read it and be like, what does that really mean? So I didn't cover this last option. The last option that you have with option B into retirement, okay, is a full reduction. What this means, if you didn't choose to waive the coverage, if you didn't want to take the no reduction and have your premiums continue to increase every 5 years, okay, your next option is a full reduction. What this means is that age 65, your insurance is going to reduce 2% every month until zero amount of insurance remains, okay? At 65, when it starts that reduction, it's free. Okay, so if option B is your only option you've got, if you have health problems, cancer, you take insulin for diabetes, if you have heart problems and you need option B, but the premium doubling every 5 years is not going to cut it, and your only option is the full reduction, don't be worried, okay? I don't want this to scare you. At 65, your premiums have been increasing since 50. But at 65, it may be out of the water expensive, but at least at this point, it's free. It will reduce 2% every month, but you're still insured, okay? While it's reducing, you are still insured with whatever amount it reduces to each month, okay? Until a zero amount of insurance remains. It's free. I don't want folks to get worried when this is their only option. If option B is your only option and you're a little stressed, give me a call. I'm more than happy to really explain how your specific situation is going to look into retirement, maybe give you a little bit of peace of mind, or figure out what we can do for you, okay? All right, now moving on to C. All right, our last option, option C in retirement. Remember, this is insurance on your spouse or child up to the age of 22. You have that same wave coverage option, just like you do with everything else. Your next option is no reduction, just like option B. This one's going to increase every 5 years, okay? If your spouse cannot be insured outside, this is your only option. You're worried about the doubling premiums, send me an email. Let's do a review, okay? Your next option is the full reduction. At age 65, it's going to do the same thing as B, where it's going to reduce until zero amount of insurance remains. Okay, if your spouse can qualify for insurance outside, if they're younger and healthier and things of that sort, and you want to look at getting insurance for them outside that's not going to have a doubling premium for more insurance than you could get with FEGLI, which is just $25,000, send me an email and let's get started on getting your spouse covered, okay? All right, so I hope that that was informative for you, the breakdown of how each individual option works for you while you're working, what that looks like for you in retirement. Again, if you have any questions or need any clarification, send me an email. But I think now that after we've gone over all of that, you know what you have, you know what that's going to look like for you. I think these are some good questions to be asking yourself now. Is this enough insurance? Is this enough insurance that if I'm not here, my family's protected? Okay. How will my insurance look like in retirement? What will your insurance look like in retirement? Every situation's different. Everyone's needs are different. Okay. What do your specific numbers look like in retirement? Is that something you're going to be able to afford? Is this, you can look at the top here, a blessing and not a burden? Okay. Is this the most cost-effective way to protect my family? If I could show you a way to save money on your insurance, would you be opposed to that? Okay. If you would like me to share that way with you, send me an email. Let's get started on saving you some money. Okay. And lastly, should I look into getting more insurance? Again, is this FEGLI enough? Am I healthy enough to where I can get more insurance outside for cheaper? Okay. If you can't answer these questions, or if you have a question you can't answer yourself, send me an email. Okay. We need to get these questions answered for you. Okay. Tomorrow's not promised to anyone. And making sure that your family's protected, your paycheck's protected, it's all important. Okay. I want to thank you for joining me today in our FEGLI overview. I hope that this was informative for you and maybe gave you some information you didn't know before, helped you better understand what you do have that's provided by your employer. If you have any questions, need any clarification, my email and my office number are there on the screen. Feel free to reach out. I'm more than happy to answer any of those, clear anything up for you. If you want a free review of your existing life insurance, if you've got FEGLI or you have things outside and you really want to do some number crunching and see if this is the most cost-effective way to be protecting your family, send me an email. I'll be more than happy to help you out, give you some insight on that, okay? And if you want to look into insurance outside, if you could qualify for something outside, send me an email. We'll see, okay? Life insurance, everybody's needs are different. It's not like picking up something off the shelf on Costco, okay? One size fits all. No, everyone's needs are different. Everyone's situations are different. And I understand that. So let's look and see if we can get something that's the right fit for you outside. Okay. I hope that, again, that this was informative, and I hope you guys have a great rest of your day. Bye-bye.